to Heart-Led Changemakers, the podcast where we dive into the stories of people making a real difference in the world. I am so excited to introduce today's guest, Monica, and she is a powerhouse in the world of finance. With over a decade of experience helping both home buyers and small business owners, Monica is all about making finance feel accessible, empowering, and most importantly, align with people's dreams and goals. She's not just about numbers, she's a true change maker, and her focus is getting clients financially fit, helping self-employed individuals break through financial barriers, and guiding small business owners towards success. Monica's passion for what she does is contagious, and she's here today to share how she's turning finance from something quite intimidating into something people can embrace with confidence. So grab a cup of coffee, get comfy, and get ready to be inspired by Monica's journey and the incredible work she's doing to help others create the life and business they've always dreamed of. Monica, welcome to the show.
Thanks, Marianne. What a great honor to be here today. I'm really excited and can't wait to get chatting.
Me too, me too. So you have been in the finance world for a while now. You're a bit of a veteran in that industry, but I'd really love for us to kick off more around um, what sparked this role, this mission? What made you fall in love with finance? Like, how did this start for you?
Yeah, good question. And I think, I have been asked this, several times before. And I really think it does, like the initial spark came from childhood. I suppose, being in situations where I perhaps my family weren't perhaps in positions to make financial choices that you would like to make. And I guess it drove a passion in me from very young that I wanted a different path as an adult. So I think that's probably how it started, and I, started to work out as an early teen how I was going to start that journey. Dial forward, I guess, then being in positions of working hard like everyone does, and buying your first properties and um, doing some property transactions, and realizing that this is a pretty fun thing to do. And what I needed to do was to learn about finance and how to use that as a tool, to to build a portfolio and then to teach other people about it. So I guess, yeah, it started as a child, and then I started to, educate myself, by, going to uni and then working in finance, and then eventually being in my own business to help, transfer knowledge to other people and teach them how to do that too.
I mean, that's a very inspired reason to step into that industry. And I know legacy is really important for you as well, especially because, obviously because of the experiences that you've had. But I know in conversation with you, you spend a lot of time talking about creating a legacy for your family, but that's also what you talk to your clients about as well, isn't it?
Absolutely. So, everyone has a different version of what a legacy is to them and what sort of legacy they want to leave. But yeah, for me, I guess, firstly, my family being, a role model to them, and so that they can see, what can happen if you do set your mind to, a plan, and understand money and property. And so I that translates to my customers. Um, I absolutely want to teach them how to do the same thing. And that really does come from my heart. Like it's very much a passion project.
Yes, and that's why you're a heart-led change maker, and that's why I wanted to interview you as well because you spend a lot of time educating your clients, and so when you're working with homeowners and business owners, you're focused very much on helping them realize their dream, right? You're helping them understand that. But as part of that, there is a very big part of your philosophy is educating people on being financially fit. And so how do you approach that with clients? Like, can you go into some more detail around that?
Yeah, sure. Are you referring to, general clients at the moment, or are you referring particularly to small business?
Let's focus more on small business. That's more the audience.
Mhm.
So that would be handy.
Yeah. So I suppose it's, well, for any customer, firstly, I would understand, what drives them, what makes them tick, what makes them get out of bed, and, what they want to achieve so that I can kind of, start to map a pathway of teaching them how to use finance as a tool to build wealth. And if their objective is to be, financially free one day, have that end in mind as well and reverse engineer that.
Yes, and so a lot of self-employed people very early on in the piece often struggle financially. When you're first starting a business, it's very clunky. It takes a long time to build resources and wealth. What what um what do you think the biggest struggle is in them securing loans and uh, understanding financially what they need in order to really, really like work around that reverse engineering? Like what are some of the big sort of issues that you're noticing?
So I guess for businesses just starting out, probably one of the things that I see that's a real hurdle to small business owners is probably not with the right team around them and the right advice, and taking that time to set their businesses up properly and their financial accounts up properly, and having an accountant and a mortgage broker or finance broker on board where they really get started in a way that is financially fit. And I suppose one of those things that I see very often is people who don't manage their accounts well from the start and end up with tax debts, and they are not separating their money from the get-go. So my recommendation, in a perfect world, would be to separate off 30% of their income monthly into a separate account to cater for your GST, your income tax, and your withholding tax. Now, that's assuming that you are setting yourself up for success to earn more than 75,000 and you register for GST. And I would strongly suggest you do that from the start, because those couple of things can really hold you back when you start to want to buy property in the future. So they would be the things that I would see often is people who have, I guess, used the money that should have been withheld for tax for business working capital. So that's probably the key thing that I see, that is a real hurdle and a misunderstanding, to not set themselves up for success from the start.
Yes. And so when people find themselves in those circumstances, what is your recommendation to work around that and work through that? Is there a specific process that they can take?
So I guess at that point I might, educate them on, cleaning up their financials. Now that might not be a quick fix, depending on whether they do own property or don't own property, how, early they are into business or not. But it would definitely be having a good chat around account conduct. So which leads to credit files, another thing that, not everybody is around, how important your credit file is to your financial life. So I guess if it was someone early in business, I would be trying to get those practices in place straight away so that we're not having those conversations in 1 to 2 years. And I suppose the first 6 months of a business, someone feels like they're going gangbusters, everything's 12 months. Same thing, 18 months is probably where the reality starts to set in if they haven't set those boundaries at the start. So I guess someone a few years in, if they do have some tax debt, sometimes it's a matter of, having to stay on a tax plan until they've paid that off. Or if it is someone who does have some equity in their house, we are able to consolidate some debt to, I guess, make those repayments manageable and to give them, give them back some freedom and, reset the boundaries from there. So, there is sometimes, changes we can make quickly, and sometimes it's a strategy of, okay, this is going to take a few months. We don't have any, equity to work with. We've got to really sort of, flip this, and it's not a quick fix.
Yes, that makes sense. And I think that it is a very easy trap for entrepreneurs to step into that can quickly get very out of hand because you might have some really successful years and then other years that especially at the beginning may not be as high. So you can those first couple of years you like you're right, you can kind of get away with it. But after that, when revenue starts to increase, there is a responsibility that needs to happen, and it's not something you can escape. It just isn't. Well, not for right now. I mean, I'm looking at what's happening in America where Trump is saying, he's cutting tax left and right, and he's even considering cutting income tax. I pray for that here. That would be amazing.
Yeah.
But we're not at that point yet, so
Right. And you can't guarantee that. Like
no,
you can't base a business plan on hope. That's
no, of
probably
course
the
not. Of course. Yeah. Yeah. And so, do you see a significant difference in the approach with small business owners and home buyers?
In which way, Marianne? Are you talking
Like what,
in the approach to sort of get themselves
like,
ready, or
yeah, yeah, to get themselves ready for, approaching the loan situation, and also what else you're seeing as the differences between the two.
yeah. So I guess, the fundamental of saving a deposit is not different for each small business owner or like self-employed person versus a PAYG. Ideally you need to save a deposit, in either situation. And at some point, you have to sort of knuckle down and put a savings plan in place to do that. But as far as application goes, as for a PAYG person versus a small business or self-employed, is fundamentally different. So a PAYG person, let's take an easy one, permanent full-time employment. They really need, one to two pay slips and, happy days, off we go. We work out their borrowing capacity, find the best lender that suits their situation, provide a recommendation, and we can, head on through the application process. Self-employed people are treated differently. And I probably didn't touch on it before, but really important when you're starting out in business to start with a structure that is not just going to last you the first year or two. And that's another probably thing that I see quite often is, maybe accountants might say to them, "Oh, just start off as a sole trader and we'll change it later on if you go quite well." It's a bit of a pain in the neck to change later on for all across all fronts. Changing is a cost then, halfway through. And when it comes to bank loans, if you've got the structure in place from the start, you've got those, financial records in that same entity, it does make it a lot easier. And, as tax, I guess, minimization or, you know, um, dealing with net profits, as a sole trader versus, say, a company or a trust structure is very different as well. So important to get really good advice from an accountant around that. And yes, try and set it up for the long term, not the short term, and take, cut corners at the start. And sorry, I got a little bit off track there. Marianne, what was your key question there?
That was,
Sorry.
I was, no, that's re I've actually, that sparked another question for me, which I'll come back to. But no, around the approach when applying for loans
Yes,
between
sorry. Yeah.
a self-employed person versus a home buyer.
So sure. Sorry. Yes. So when it comes to self-employed people, ideally they need 1 full year of financials and an ABN that is at least 18 months old, to be able to apply for what we call a full documentation loan at a lender. Now that is to be able to be eligible for the best rates in the market and the best mainstream lenders. So now that has loosened up a lot more recently, where a lot more lenders have come into the market who will accept 1 year financials in isolation. Previously, there was probably one major lender who sort of led that space, but we now have, three or four lenders who've really moved into that space in the mainstream world, where where you do have access to the best rates. So that's great news for self-employed people, and now there is a bit of choice, so that's fantastic. Now, from what I was talking about before, those people need to have cleaned up backyards, I'd call it. So no tax debt, good account conduct. And when I talk account conduct, inside a lender, they are ruthless, with if you've had credit card, arrears, if you've got, an account you are holding for your third child and you've forgotten about it and it's gone overdrawn, all of those little things can unfortunately put little sort of marks against your credit file internally in that lender. So we have a credit file, which is, Equifax is probably one of the main leaders in that space that we would use to have a look at people's credit file. And then each mainstream lender will have their internal credit guide for a particular person, or, if it's a self-employed person, their entity. So every little thing counts. So, making sure if you want to be eligible for the best rates and the mainstream lenders, it is, having those things set up from the start, making sure you don't have any tax outstanding, trying to pay your taxes on time. All of those things count when it comes to, okay, I want to buy property. I've got 1 year financials. Let's go. And obviously a deposit to go with it. Now, let's say, this isn't a perfect world. So let's talk about, other situations. You can get a loan before you've achieved 1 full year of financials. There is lenders that we call third tier lenders that will do have a lenience for that. However, you will pay for that privilege. The rates will be higher, the establishment fees will be higher, etc. So there is a space for that. And then there's also a space so I referred to full documentation loan before. So there's what we call low documentation loan. And that is basically, as it refers, the lender will ask for less documentation, but they'll charge a higher rate for it, and there'll be an established fee and possibly a risk fee for that. And that will mean that we can verify your income. So your question around the main differences between PAYG and self-employed. PAYG, we verify income by payslips. Self-employed, we verify by financials or payslips, or if they don't have their financials completed or their current year might be better than their previous year and they want to use, their current data, we can sometimes use BAS to verify income, an accountant letter, or bank statements, recent bank statements. Now that's what we call a low documentation loan. And sometimes there's a very good reason why someone had a lot, might have had a good 23 financial year, then something happened in the business or a health incident or something, and 24 did not go as well, but 25 is tracking back to normal. So, sometimes there's good reason to have a look at a low documentation loan for those reasons. And that doesn't mean you have to stay in that, once you've got financials that are sort of back on track to, perhaps what your best trends were, we can always refinance you back to a mainstream at that time if they want to. But it does help self-employed businesses, get into property that earlier if they're new to business or have had a year that didn't track as well as previously, and that your current data is better.
Yeah, that makes a lot of sense. And with PAYG people, obviously employed by somebody else, is that so? Do they? It used to be. It seems different now. It used to be from when I used to work elsewhere and I bought a property, I think you needed to be with that workplace more than 6 months. Is that still the case, or is it just one or two pay slips and that's it?
So generally, it's just one or two pay slips if you're full-time permanent employed. So sometimes we see a disconnect between what people understand as working full-time. So someone working casually full-time versus someone work permanent full-time is not the same thing.
Yeah.
So casual means that you are not paid sick leave and holiday pay. And usually your hourly rate might be higher than
Yeah.
someone who's permanent full-time and receives sick leave and holiday pay. So permanent full-time, we usually only need 1 to 2 pay slips in that role. And sorry, permanent part-time. Casual is 6 months in role. We can sometimes demonstrate 12 months in the same industry, but they've only been in the new role a few months. But I guess there's always uh, unique situations that we might be able to, apply for exceptions for. But yes, as a general rule, 6 months in role in a casual, if you're working casually.
Can I be a bit cheeky and just ask the question? I'm a disruptor and I'm just thinking, what's to say somebody who's self-employed, right? Who's got their little
Hmm.
their business, but they know that they want to buy a house or they want to, get a business loan, but it goes that way. What's to
Hmm.
say that they don't apply and take a full-time job working for somebody
Hmm.
else, work there for a few months, 2 or 3, let's say, and then after they secure their loan, then leave and go back to what they were doing. What's to say they can't do that?
There's nothing to say they can't do that. In reality, that probably does happen.
Yeah,
That is possible. If you get a full-time job, get a home loan, pay your repayments, never have an issue, and then return to self-employed work and continue to be up to date with your repayments.
yeah,
Uh, Unless you try to make a change to your home loan as far as an increase or buy another property, really the lender wouldn't know after the property has settled. I
yeah,
mean, obviously, we don't encourage you to jump around to employments because, obviously that can be, a bit dangerous for yourself. But yeah, certainly it can happen. And I just probably thought about another situation where, how do you get started and what's the best thing to do? If you can, as a business owner, pay yourself a salary, it's not always possible depending on what industry you go into and how quickly you're earning enough income. But if you can pay yourself as an employee of the company, meaning you're paying, super and the tax, for as an employer, but also, you're receiving those benefits as an employee. That is also a really good way to set yourself up for very easy home loans in the future. So, um, that's another good way to do it. And then if you are paying yourself enough and that salary and that services the loan that you were looking to take out, all we would need is pay slips rather than your financials. So that's what we call salaried self-employed
yeah.
pathway.
Okay, that's something that I've not heard before, so that's really good intel as well. I love that so much. I think that a lot of people are not clear on what's available to them and the different options to get to where they want to get to. So thank you. That feels like a lot of good information. I feel like finance is a whole other world. I think you're either got a really great relationship with that side of things or you don't. I don't feel like there's people that sort of sit in the middle. From your perspective, for people who have had a challenging relationship with finance and wealth building, what is your approach to make it more relaxed, more fun, less anxious, less stressful? Like what's your approach around that?
Well, definitely to be non-judgmental. Everyone's got a story. If everyone's probably done something, slightly I wouldn't say wrong, but might not have made the best choice with finances, whether you're a young teen or an adult or whatever. Everyone's made a mistake where they might not be a mistake, but a choice that might not have gone ideal. And that could be, buying a car and you've made, you're buying a car, you've spent more than you should have, and it's a depreciating asset, and then selling that car and you're barely making, you're barely getting your money back, too early, that sort of thing. Um, I guess just normal property transactions. Some might get caught up in something they read and end up buying a property in a, some sort of development that didn't go as well as they thought it would. Making late payments on a credit card, all sorts of things. So, there's a million things that people have probably done. We're all human. So, I guess I don't approach it like just because I work in it every day, I don't expect people to be, to not be human and not to have, had some sort of hiccup at somewhere. So I would definitely, use my education and experience to educate my customers. Try and use relatable language. Try not to use jargon that people don't understand, and try to, I guess after I understand what they're looking to do, try to build a story around what's possible and empower them by that. And yeah, I think once and to try to move someone's mindset from being scared of money and taking a risk in property to how amazing it could be. Because the reality is, if you buy your foundation property and build from that, once you've started to understand what capital growth is, you're basically sleeping and making money. So, there's not many things in life that you can do that with. So, you start with your first property and you work hard, pay down your loan repayments, and then all of a sudden you've got this beautiful thing called equity, which is, a way to leverage a deposit for the next property. And, I guess just teaching people how to do that and how what that means, all of a sudden you're building a picture in their mind around, okay, I've either bought the first property or the second one, and I'm looking for the third, or I'm looking for my first property and I'm trying to understand how this will work. And I guess, forecasting their mind forward and around, it might be an early retirement, or it might be someone who's starting a little later in life, and all of a sudden they can see how they can go from, we've got not much in super at the moment to have that life later on, or that early retirement, to we can now see how we are going to have a really, great life going forward. And if it's just making profit on properties as a young person, sort of giving some examples of how to do that. I mean, it is risk taking, educated risk taking, and it is sometimes, putting a bit of hard work in, and it's understanding what that person's risk profile is. It might be a person who, has absolutely no want to go and renovate a property, or, to work out how to manufacture money in a property. So then that's a completely different strategy from someone who comes along and says, hey, my partner and I are really handy, we think we can do this, so that's a whole different story. So I think it's the person who's feeling intimidated or feels quite scared about it. It's just breaking it down to, okay, this is where you are, this is where you've told me you'd like to be, and this is how I think you could get there. And that's a pretty empowering way to go. And when people you've built that rapport and they start to see that you have the knowledge and the experience to help them and hold their hand. And also, I teach them how to love their money, like build a relationship with your money. If you're the person who's got some debts, let's get through that stage of getting those, small debts that are annoying. It might have been credit card debt or car loan debt or whatever. Let's work through that. Let's, get to a point where that's manageable so that you can buy a property. And then let's learn to love your money. And that's, I guess, watching it grow. Now, whether that's watching your house values grow or your bank accounts grow, look at your internet banking every day, feel proud when you've achieved a small goal. I think that's all helps with the mindset change.
Absolutely, it does. And when you're looking at deposits now, like in this climate, what what is like an appropriate deposit for a home loan, for example?
Well, I guess ideally, if you've, got great savings habits, you would try to save 20% plus costs, which would be about another 5%. Um, but that's, in a perfect world. If you don't, and it depends whether you're a first home buyer or, you're buying an investment property. If you're a first home buyer and you're looking to buy a new property or construct, there's a lot of incentives out there from the government. And so if you are in that bucket, you might need less deposit than someone else. So, there is also other ways to achieve a deposit. So, if you're a young first home buyer and you have a parent that has a lot of equity in a property, you might be able to tap into that parental equity, and we would call that a parental guarantor. So the parent's not physically handing money over, but they are allowing the son or daughter to utilize their property for comfort. So the lender that you go to for the adult children to buy their first property would take comfort in the fact that the parents have a property with either no debt or low debt on it, and link those two properties together. And if for any reason the adult children couldn't pay their mortgage repayments or something happened, they've got that comfort there that there is more equity available from the parents. So the parents are under, no they would not be paying the repayments for the adult children. It would just be a comfort if anything happened, they would be called upon. I guess that's the bottom line. But the onus is definitely on the adult children to pay the repayments.
Yeah.
And once the property value the loan on the property value is 80% or less, at that point we can release the parents' property. And I would normally say to parents, probably expect at least 5 years. Over the last few years, that's happened a lot quicker. But yeah, we sort of go through a few checks and balances with the parents around, is it, are they eligible to be able to do that?
Yeah. Okay. So 20, about 25% you said as a deposit
That's
right now.
yeah,
Yeah.
a perfect world. In a normal situation for someone who, a young person or any person, I suppose, who's saving for a house. So the fees and charges are approximately 5%. The deposit is 5% that you would require, and that would be what we call genuine savings. So genuine savings is 5% of the purchase price of the property. And then when you buy a property and your loan is more than 80% of the value of the house, the lender would ask you to pay lender's mortgage insurance, and that is an additional cost. So that's somewhere between 2 and 3% of the value of the property. So to clarify, 5% deposit, and we need to establish genuine savings, meaning savings have been accumulated in an account for 3 months or more. 5% for the cost, government cost, meaning stamp duty, transfer fees, etc., and 2 to 3% for lender's mortgage insurance. Now, it is a complex question you've asked me because there is so many government incentives. So, and there's also government loans. So one of the government incentives is first home loan deposit scheme, where if you're eligible, the government will cover the costs of the lender's mortgage insurance. So that rules out 2 to 3%. There is government loans in South Australia. It's called Home Start, where they do not charge lenders mortgage insurance because it is government funded money. And that's if you are eligible for those loans, there is no lender's mortgage insurance, but there is a premium on their rates for those loans. So it's a bit of a minefield, Marianne, as
Yeah.
to when someone when a customer comes to me, I guess we, do the data collection and then um, have the conversation, the discovery conversation with that customer to find out what their particular situation is. And then, we tailor a solution to them. And yes, it's so you might need as little as, 3 to 5% if you're eligible for a low deposit loan, plus costs. But I guess if you are aiming for a level of deposit that would, allow you to be eligible for most mainstream lenders, you would be aiming for sort of 13%.
Yep. Yeah, yeah, that's really good. That's really good information. I know you are very passionate about investing and investment properties. It is something that you do yourself, and you've got a wonderful partner who does a lot of the renovations in the investment properties that you're buying. You guys are like a dream team, if you will. And so I really love, from your perspective, what makes people hesitant? Why are not more people purchasing property for investment? Why do they feel nervous to do that?
I think it's just not understanding it, Marianne. I think that would be the barrier. And we've gone from a very low rate environment where um, if you bought an investment property and it was on interest only, the rent was basic almost, or it was, or almost covering the repayments, the interest repayments. And the only shortfall that you would need to input would be, the council rates, insurance, the water charge, etc. So that was, when you break that down, that was a very palatable amount. Okay, your rent minus your property fees is going to cover the interest. In the past when we were in the very low rate environment, and let's add up what the council rates, insurance, water levy, etc. is. Break that down to a weekly or a monthly amount, and generally that was quite palatable. And then explain how there's tax deductions for a tax deductible property, which is an investment property, and the person has a chat to their accountant and understands that they're able to offset tax that they're paying in their perhaps PAYG job or as a self-employed person, your income tax, and it sounded pretty attractive. So roll that forward, rates have increased, and now there probably is a bigger shortfall that you have to take out of your monthly cash flow to top that property up. So, I guess that has made it a little bit of a bigger decision. And I think just the general, education piece around an investment property and it being tax deductible, what does that really mean? And that's probably a conversation between, with your finance broker or mortgage broker and your accountant, and trying to understand what that means. And it might mean, if you're a PAYG person, either you're a salaried self-employed, or you're working for someone, and that might mean quite a refund at the end of the financial year, because you are able to offset that tax that you pay. So, and even just, I guess, understanding what does negative gearing and positive gearing means. And very simply, and obviously I'm not an accountant, I'm not espousing to be, but positive gearing is where the rental income that comes in is more than the expenses that go out. Now, expenses are, repayments, so interest, your property management fees, council rates, insurance, etc., and any maintenance on that property in that particular financial year. Negatively geared means that the expenses are higher than the income. And when that happens, there's tax deductibility that you're able to take advantage of, and that assists you with your end of year tax. So I think it's, probably just not being educated to it, not understanding it, and also not having someone to sit down and go, okay, in a normal world, whichever state you buy in, this would be, the amount that you could calculate as a capital growth. And, you sort of calculate that capitalizing growth and sort of put it into a number and say, well, if you buy this property now, our property cycle has now pushed out to about 12 to 15 years. But if you are able to hold this property for 12 to 15 years, that property is going to be worth probably double. Based on the last 100 years of cycles of property in Australia, that's what's happened. So you buy a property for 600,000 today, you'd hope in 15 years' time it's worth 1.2 million. And, so there's a lot of long-term benefit and there's a lot of tax deductibility along the way. So yeah, it can be really exciting. Like I love talking about it, but I guess why people don't do it is because it is, I guess some people might say it's hard, they don't understand it, and so they're just too scared to sort of take that step.
Yeah, that makes a lot of sense. And one of the things that I really love about um, your approach is it is very much about being transparent. You're very transparent about the challenges around the finance side of things, but also the ease and the opportunity. And I love that you're showcasing that across the board. I love the behind the scenes in regards to the investment properties. I think a lot of people are very curious about that. I feel like, again, finance can be very scary for people. They've got a lot of attachment, a lot of stories to it. It's not just theirs, it's that, generationally they're carrying stories from people before them, and even
Mhm.
depending on their background, their ethnicity, that impacts as well. And I know my dad, he came from quite a low socio-economic background, if you will, in Greece. And when they moved to Australia, he vowed that he was never going to have a life like that. That was never going to be his thing.
Mhm.
And he built a lot of wealth, which is great. But some people stay in those repetitive stories of I can't move forward. I can't. They feel guilt around creating wealth, and it's
Yeah,
quite
yeah.
complicated. And I'm wondering, given your history and what you were saying at the beginning of our conversation, how how do you juggle being a small business owner and being someone who's, responsible for other people's finance? How do you juggle that for yourself, in all of the ways, not only just for you, but for your business, for your family, etc.?
Mm. I think it's a really good question, and it's a probably a complex answer. So I know I hear what you're saying around um, your background and how people hold on to that mindset. And, to a degree, I've probably had to break away from that as well around, allowing myself to um, earn money and to be able to, buy nice things, take a holiday, live in a comfortable house, all those things that probably wasn't in my childhood, and not feeling guilty about it. And I think that is probably a hard thing to break through. And I suppose it's, that real, um, I suppose looking within, really valuing yourself and really practicing that, valuing yourself so that other people value you. And I think that sort of starts to change perception. And, I guess processing your own shit really, isn't it, from the past. If you've got those sort of things that are following you through life and defining you from the past, you've got to do the work at some point to go, right, okay, how am I going to drop this baggage off and start from here, draw a line in the sand so that I'm the person I am today, not from my dad or my grandpa or whatever it was in your past that's defining you a little bit. And like I said, start to love your own money. If you're making it and you're working hard for it, like how good. And hang around people who appreciate the same thing. Like, I think that's another big one. Surround yourself with the right people. You're not going to be successful if you're hanging around people who don't want to be successful. Don't They're jealous of people who are successful. They're trying to, they're negative Nellies, like do all those things that successful people do. I mean, so just to manage, I guess that whole picture, that whole juggle, in a day-to-day life, I suppose I would take short breaks as well as, one decent break a year. And, taking those short breaks, getting out in nature. I do exercise. I'm a bit of a yogi. All of those things are like super juice to my brain. Like if I get down on the beach and go for a run, that all the ideas just start running around my head. I start strategizing about the next project and, where we're at. I obviously have the inside of finance, and so I know exactly how to leverage our lives to and how far I can go to sort of achieve that next project. And I've used myself as a practice dummy, or I've used us. And as you've said before, I do have a very talented husband who is able to do a lot of physical work. So we have been able to use ourselves as test dummies and to do a lot of projects, outside of, my customers, which is fabulous because then I can use those as examples. So I think, I feel like my superpower is role modeling. I love doing that. And, I think making sure that you move yourself to a situation where you um, you can let your creative juices flow and you can spend some time on your personal strategy outside of your work. And that's probably what I do with short breaks. I mean, drive trips, we like drive trips. You get your chatter going, you're in a car. So it's a great time to sort of talk to each other. And yeah, I think just that getting out in nature, moving away from what you do on a day-to-day basis, get the fresh air sort of, going, it does give you that time to process what it is you want to do next. And, are you on the trajectory that you want to be, or do you need to change that up? So, yeah, and I'm a big self-care person. I think, stepping out of your comfort zone, doing a few things that you haven't done before to really, take that time for self-care. I think that all of those things make you feel wealthy, even if you're not, and I love that. I don't know where I read or, who told me that, but I love that theory of when you're starting on your journey, before you can afford it, go and buy yourself a really nice set of sheets and a really nice luxurious pillow. There's something around the mindset that you go to bed every night, this beautifully made bed, you jump into it with this, gorgeous pillow and, snuggle into it and these beautiful sheets. And that's where the mindset starts. You feel wealthy because you're in this beautiful, comfy bed and you get up and you open the blinds and you're into the next day and your mindset starts to change around, I deserve this. I deserve these beautiful sheets and this beautiful pillow. And
Yeah.
that might be all you have to start with, but it's all around mindset.
Yeah, I love that. I wouldn't have even thought about it like that. I mean, my bed is my favorite place. So for me, it is a sanctuary and, it is like a cloud. Like I love it. And I have naturally done that side of things. But I think a lot of people, they don't even make their bed. They don't even treat it like that. And even that, just one small tweak, it is impacting your mindset. Absolutely. Especially at the end of the day, it feels like you've made it, and you can keep going. And it is a your
Well,
brain
you've
has got the
decluttered,
visual. Yeah. Yeah,
and
absolutely.
you've
What
put
that's
into
a
this your sanctity, your place, and
yeah.
it's isn't that beautiful? I can't wait to lie on those pillows and those sheets.
Yeah, and also to it's a beautiful reminder to allow yourself to dream bigger as well. And
Absolutely.
and also while you're working so hard. A lot of people are in the grind. There's a lot of hustle culture out there. So why not counteract it then with something that makes you feel like this is going to have a payoff. And sometimes you do need to, put a lot of effort in and concentrate and make some sacrifices. But if you've got one thing that you know that you can anchor to and come back to remind you of why you're doing what you're doing, that's brilliant. I
Yeah.
think out of everything you've said today, I think that that's my favorite thing. That I mean, there's been a lot of really good sharing, but I love that because that
Got so
is like so easy. It's so easy to do.
it is. And another, I don't know, tip I picked up somewhere along the line is, always have, and I guess this is a little bit outdated now because we don't have cash as much, but always have a note in your wallet that you don't spend, like $50 note or whatever, $100 note, because every time you open, now whether it's probably your phone, when you open it, if you see money, you feel like you've got money, so you
Yeah.
don't have that immediate panic situation. Oh God, I've got no money in this situation. So I think there's a lot of those manifestation pieces that I love with learning to love your money. And yeah, start early in your property, your building wealth journey around those tips. So yes, Marianne's obviously loved that tip today.
I did.
Go and buy yourself an amazing pillow, go and buy yourself some nice sheets, and revel in those. And soon you'll be buying yourself a luxury penthouse apartment. So yeah, all for manifestation, Marianne.
Yeah, yeah, yeah. And of course that also forms your approach and part of your work and the education piece with your clients too, isn't it? Like you spend a lot of time talking to them around the mindset.
Yeah, definitely. And trying to take that fear away, using relatable language, having a team that is, that the customers feel like they can contact to, at any time. No questions, dumb question, like, just, it's usually just, and trying not to be complacent myself, because when you've been in the finance industry for a long time, which is now about, uh, 17, 18 years now. So when you've been in it for a long time, you hear a lot of, jargon and words that, you do sort of forget that not everyone knows those on a daily basis, or understands that particular thing. And sometimes it's something really simple. So I try not to be complacent about anything. But yes, occasionally I sort of have to trigger myself and go, that's something that not everyone knows. Drill down to the basics, and try and educate people on those things.
Yes, so good, so good. Monica, thank you so much for joining me on the show today. I've loved talking to you, and I hope that for our audience, some of the fear around the finances, some of the questions that they may have had, especially as entrepreneurs, it might have been simmering in the background and they haven't had a chance to go and talk to anybody. If they wanted to reach out to you, what's the best way someone can contact you, Monica?
Yeah, so I'd say jump on our website. We have a link on there to book an appointment. That'd be great. We obviously are on our socials as well, Insta or Facebook. But yeah, our website, you can easily just click the link and book an appointment. So, and
Yeah.
there's different appointments, but a discovery call, free 15-minute discovery call is available to everybody. So yeah, take advantage of it and ask me some curly questions. And hopefully I haven't overshared or been too honest today. And
I don't think so.
there's always
No, there's no such thing as oversharing. I've loved it. And so the business just for those who want to jump on it immediately, I will put the link in the description. But the business is called SA Finance Hub. So please reach out to Monica. She's an absolute legend and works from the highest level of integrity, and that's who you want on your team doing all of that hard work for you. She makes it easy, definitely.
absolutely. Finance is a team sport, so make sure you engage with the right team.
Definitely. All right, Monica, I will speak to you soon. Thank you for joining me.
Thanks, Marianne. It's been great.
Thanks.